Now, BLS International Services is in focus. The stock has surged nearly 150% in the last 1 year. Do note the company reported a good set of first quarter numbers, and during its first quarter conference call, the company indicated that it aims to maintain margins at 20% levels. Shikhar Aggarwal is Joint Managing Director at BLS International, and he's joining us right now to take some questions. Shikhar, good to have you with us here. Thank you very much for your time. Prashant, this side, could you tell us how has demand shaped up in July and August? I mean, in the first quarter, consolidated revenues were down 14.5% quarter on quarter, led by about an 18% drop in visa and consular services. What explains that? Because, we haven't seen a quarter-on-quarter drop in revenues in the last 2 years now. Is there a little bit of fatigue, signs of kind of some of this demand tapering off, or is this seasonality?
See, if you compare our numbers year on year, we have grown 40% on a revenue basis and 150% on EBITDA level from similar quarter last year. So visa consular service business is, the revenue changes depending on, the season. So that is why it was just a seasonal issue. The revenue was less compared to last quarter. But if you compare to the similar quarter last year, the numbers have drastically grown 150% from at EBITDA levels.
Okay, all right. Hi, Shikhar. Good morning. Good to see you in. But how has the start been? How has the past 2 months or so? Demand is as strong. And also, I wanted to focus on margins. You had indicated that you'd like to see margins move towards 20%. I think you achieved that in the past quarter. But you were also talking about price hikes on new contracts. Has that happened? What is the quantum?
Correct. So demand has been going strong, whatever numbers that we've achieved in the first quarter. We are seeing good growth coming from across the world. Countries like China has now, opened up. We have opened up our offices. So I think we expect that, whatever numbers that we have achieved in the first quarter, this should maintain. Now demand is actually growing. So we are seeing more numbers than last year. On the margin front, as we have been telling that we've been aggressively looking at, constantly working towards increasing the margins of the company. In the last few years, in the last few quarters, we were doing 15 to 16% margins with small increase. And this quarter, finally, all the efforts that we are doing have given us fruits, and margins have jumped to 20% at EBITDA level. We expect the margins that we've achieved now to continue, and we will constantly strive to improve the margins. This primarily, the reasons for the increase in margins have also been because we have gotten increases in service charges. The newer contracts that we have done, for example, from the Spanish government, have been at higher service charges than last year. We have got increase in the prices for value-added services. There has been definitely an increase in conversion. The costs that we had achieved during COVID, the new way of working that we had learned, we have retained some of those, in the measures that we took. So those are the reasons for this EBITDA margins.
Okay, Shikhar, just a quick counter question on this. China, reopening again. I recall when you joined us a couple of months ago or so, you said China and Russia, I think the volumes are still not back to optimal levels. So, in comparison to what you have seen as a percentage of optimal levels, what is it at? And also, how much do both of them contribute, to your total pie?
So, last year, the volumes from pre-COVID level, we were back at 70%. So 65% we were back at. So 30 to 35% used to come from Russia and China, on a pre-COVID basis. Now, Russia is still not, fully back. The volumes are still very negligible. But whereas in China, we have seen the volumes, have started to come back. We are seeing pre-COVID numbers in China, what we were doing, around 50 to 60% of them are already back, and we expect the numbers to grow further.
Sorry, Shikhar, so now, how many countries do you do this for? Could you give us a lay of the land right now?
So we work globally in more than 64 countries, and we work with more than 40 client governments. If you see recently, we have won a lot of contracts with governments like Germany, Italy. We have won 4 to 5 contracts with Hungary, with Poland, with Portugal. So we are actually winning a lot of Schengen contracts, in the last 1 or 2 years. We have recently been re-awarded our Spanish global contract at a higher service charge. And also this time a new category of visa, which is the national visa, has also been outsourced to us, which will lead to an increase in further volume of applications for us.
And is there a big concentration? If you were to split the revenues by countries, the big blocks, what would that be?
So globally, now as a company, all our revenue is not concentrated in any market. They're split, in different geographies around the world. So there is no particular, split that we have country-wise, client-wise, but we are, I think, maintaining an even split with all our governments right now.
Okay, all right. Shikhar, the other big trigger is going to be that IPO, right? BLS e-services. When is it likely? What's the timeline? If you could tell us about that. I think you're looking to raise a couple of 100 crores. So just fill us in with an update on that front.
Correct. So BLS Services, which is a subsidiary of BLS International, it comprises of the banking correspondent and the e-governance business of the company. The revenue and profitability has really grown, compared to last year, similar quarter last year. So that company, we are planning to, dilute around 2.42 crore shares. It will be a fresh issue of shares. We've already filed the DRHP, and depending on the SEBI approval, which we expect will take a couple of months, we plan to list that company. The funds that will be raised, from that IPO will be utilized for both organic and inorganic growth of BLS e-services. We see a big growth potential in that business. We are now already in all the states of India, including all union territories, with presence of physical centers. So we aim to expand on that, and very soon we will be getting more services incorporated in our existing centers.
Okay, all right, Shikhar, good to see you in. Thanks so much for joining in, and wishing you all the best. You have targets for the year, 20% of margins, that IPO as well on the card, so plenty happening for the company. Looking forward to having a chat with you in the coming months.